So this evening, volatility back ratio revolution, create maximum returns with minimal risk. My name is Don Kaufman, and you are watching a TheoTrade presentation. We have a risk disclosure. We're not financial advisors nor a broker dealer. I always throw this out to you because I did spend the better part of about 15 years inside of the brokerage world. So I'll describe that here momentarily. It's a copyright disclaimer. This is ours. This is not yours. The other thing I always detail right up front, listen, if you ever need to get a hold of us after this evening, okay, we kind of encourage that. Um, email, email us, support at TheoTrade.com. It's right here, support at TheoTrade.com. And just put Don in the heading. By the way, we use a common inbox. So all of us here at TheoTrade, there's quite a few of us now, and I'll introduce everybody here a little bit later this evening. But all of us here at TheoTrade use support at TheoTrade.com as the common inbox. All you have to do is just come in here and simply say, hey, I want to, reach Don. I want to reach, and we're good. So that's just put the name right in the heading over there. By the way, TheoTrade is based in Scottsdale, Arizona, but I always ask everybody where they're joining us from. I am not broadcasting from Scottsdale, Arizona. I have decided to pick up and to temporarily move to St. Croix in the U.S. Virgin Island. It's not half bad. I actually live in a community here that's got a bunch of traders in it, and talking to them. Actually, I was talking to them a little bit earlier today. Some interesting information being passed around. It's like a little community again of some fairly substantial traders that live down here in St. Croix, of all places. And we're standing outside, getting wet in the rain, discussing some futures trades. Hey, tonight, this is why you're here. Listen, you're going to take the time to be here tonight, and I want you to be able to walk away with something definitive. And I always like to clarify what that is right up front. And when I say something definitive, listen, I want you guys to be able to walk away with something tangible, something that you can use, literally use inside of the marketplace tomorrow. And here, learn where edge lies in the markets, specifically today, like right now. And more importantly, the strategy that turns edge into potential profit. Number two over here, find a strategy with a potential for mass returns with minimal risk. So we're actually going to put in a strategy that I'm going to discuss pretty extensively here, where the risk is not that substantial. There are some very large returns that you're capable of making in here. And again, I'm going to show you my own trades on here. In fact, I'm going to be pretty persistent about showing you my own trades. Number three, discover how you can reduce risk of your portfolio, regardless if you're long or short. The strategy that I will detail tonight can be used as a portfolio hedge. So for those of you that are new, if you're unfamiliar with hedging, it's just risk reduction. Number four, determine how one strategy can help you create high return to risk ratio, even the most extreme of markets. In fact, extreme is preferable. And what the right steps to take this evening are, whether you're trading or investing. And one thing I also want to detail here, listen, you may not be, if you will, like an active trader. Okay, you can be a little bit more of an investor this evening. That's fine. This will also pertain to you because, again, you can use this particular strategy much more as a hedge. All right, there is a study that I am going to be using throughout the course of this evening's webcast. And that study, because I'm using it throughout the course of this evening webcast, we are going to provide you, okay, the link specifically to that particular study at the end, okay, of tonight's webcast. And again, I want to clarify, and I'll actually show you the study here momentarily, and you're going to be seeing this study all throughout the course of the evening. But the one point that I want to make over here is, again, if people attend all kinds of different, webinars and so forth, and you go to the webinar, they show a study, and then they, throw a price tag up there of like $1,000. We are giving you, okay, the auto expected move indicator this evening, which is, it is simply the most advanced indicator ever compiled. And it's an indicator that has literally changed the way that we view markets. And again, I'm going to be detailing it throughout the course of the evening. And the reason that we're providing this to you, and it is at least a $500 value. Again, it's an indicator I use every single day. It's an indicator that I use, on any of the nightly videos that I talk about. I talk about expected move, okay, just continuously. Every single day I'm using this thing. And the reason we provide it to you is we feel that if you want to have a broader understanding of what I'm discussing tonight and to be able to use some of these techniques in the future, that you're likely to need the auto expected move indicator. Again, it's a $497 value. Remember this, right at the end of tonight's webcast, I will provide you a link to this. What is this? This is the auto expected move indicator. And, rather than, talk you through it, auto expected move ranges, listen, you can read through that. We're going to detail this, okay, this evening. What I want you to see, these 3 lines, okay, those 3 lines are what the options marketplace, yeah, I said options. This is what the options marketplace, okay, depicted the range to be. But we didn't move here. We moved up here, okay, which is phenomenal. The week before, we exploded through it. The week before that, we exploded through it. The options marketplace right now is doing a terrible job of handicapping risk. So the study here defines, if you will, efficiency or lack thereof in the markets. And it's going to give us a lot of our setup and a lot of our edge this evening. Okay, so let's break that down. By the way, somebody was asking for talking about edge. We will absolutely talk a little bit more about edge as the evening kind of progresses here. So next in the docket, a little bit of a housekeeping item. Housekeeping. Listen, this is skill set, and I'm really gonna fire at you guys this evening. We have a nice sized group. Okay, you guys, again, we have lots of help. We got Blake, Brandon, Corey, Jeff is on, myself, all to be able to answer questions. And the reason I'm saying that is because I'm going to fire at you, as I said, fairly high level tonight. I hope that's okay. I say shut the door, turn off Skype, chat, whatever else is distracting you. Get rid of Facebook. Don't even close it. Just get rid of it. Put your phone on silent mode. Kick out the kids. Definitely kick out the kids. Kick out the grandkids. But the dog can stay. Listen, all I'm saying here, you took the time to be here. All right. This is important. And again, I'm going to drive a huge amount into you this evening. Focus on being here. I think it's really going to be worthwhile to you. So a little bit about me. Again, my name is Don Kaufman. Some of you might be familiar with you. Anybody here brand new has no idea what a Don Kaufman even is, or a TheoTrade? That's okay, people. Come on, admitting it is the first step this evening. So if you've never heard of myself or TheoTrade, I'll just give you a little background first on myself. But I watched order flow for 15 years. Okay, and it's in very large part what kind of brought me here. So when people have no idea, by the way, like whenever I talk about like I watched order flow, they're like, oh, what's that? Well, we're going to talk about that. I grew up around traders. Literally grew up. And when I say grew up around traders, I had an uncle that was a market maker, and he was a market maker before I was even born. And he launched a trading firm back in the 1970s. The firm was called O'Connor and Associates, and the firm started with one seat, his seat, on the floor of the Chicago Board Options Exchange, and grew to over 500 seats on exchanges around the world. He sold the company. It was a multiple billion-dollar deal, but he sold it actually all the way back in 1992, and a multi-billion-dollar deal in 92 was absolutely huge. He sold it to, at the time, what was the Swiss bank. They turned around and became UBS, of course, Warburg. The rest is kind of history. I had cousins that traded, and I got involved through them in the late 90s. So I was trading in Chicago in the late 90s, and it was only about 2 years after I started trading, I got an invitation from a couple of traders that I knew to go with them to a startup brokerage firm. And that startup brokerage firm was actually called Thinkorswim. And a lot of people don't really know how I ended up at Thinkorswim. That's pretty much it. Some people I knew from the trading floor literally approached me. And I mean, I knew these guys and I'd talked to them before, but I didn't know them well. They just approached me on the side and they said, hey, kid, we've heard good things. And I'm like, yeah, have you heard anything? They go, we've heard good things. We want you to join us. And you're going to build the education division of this company called Thinkorswim. And I'm like, sure. I was 24 years old. They just gave me, a great opportunity at a brokerage firm startup. And again, I progressed there. We took the company public in 2007, and I was on the executive team at that time. The company that was when purchased in 2009 by none other than TD Ameritrade. And then I went on to run education for TD Ameritrade from roughly 2010 to about almost 2015. And people say, why'd you leave? I had a 5-year lockup clause. After that 5 years, almost to the day, I was like, I'm out of here. And again, I learned a huge amount from both Thinkorswim and TD Ameritrade. When I say I learned a huge amount, it's not what you think. Okay, we learned a huge amount because we studied retail clients. Okay, at the time that I was actually at TD Ameritrade, we had over 7 million clients. 7 million clients. We knew everything that you did. We watched every single trade you ever did. We actually studied them. And somebody says, I did an iron condor. I can tell you how people made money in iron condors, lost money. I did covered calls. We looked at everything. Every piece of data that you ever did in terms of a trade has been analyzed upwards, downs, forward. We had an entire division at TD Ameritrade that did nothing but trader analysis. And they fed all of that directly to who? The education division. Why? Because if we could make you better at what you did, then you were going to make more money. Well, guess what? TD Ameritrade and the regulators wouldn't actually allow us to use some of the data that we mined out. So we left. And I say we, there's a bunch of people that work here at TheoTrade that are directly from both Thinkorswim and TD Ameritrade. And those 7 million clients, again, we watched order flow for the better part of 15 years. And what you're going to learn here this evening, it's not just about, you traded on the floor. Who cares about that? Okay, that's a dead business. Trading on the floor ended in the late 90s. What we learned here came from watching literally billions of dollars trade hands and the knowledge of what works best specifically for retail traders. And again, that's in large part what kind of brought me here today. We do some media events from time to time. I still do, this is TD Ameritrade TV. This is the last time I was actually in Chicago, which is crazy because I used to go to Chicago at least quarterly. Obviously, things have changed a little bit in recent history, but it's the last time I did an in-person in Chicago. Now I actually broadcast remotely from. I love it. I get to broadcast from the U.S. Virgin Islands to Chicago. Once in a while, I have them turn their camera on. I just want to see snow. It's good. It's good for me. I'll do CNBC from time to time. I just show this one because it's the most memorable. It's the only time they pitted me against Kevin O'Leary. I was the short in Apple. He was the long. Worked out very, very well. All right. That's a little bit about me, a little bit about TheoTrade. Let's get started. Listen, here now, we're going through an incredibly difficult time. In all the chaos that you've seen, recent weeks, recent months, all of 2020, there's one key point to be made out of this. That's right here. Volatility is a very good thing. You may not necessarily feel that right now, but I constantly stress this to traders. This has been an extraordinary year, but extraordinary volatility has been the key. And it has provided ample setups and ample opportunities. And it's in very large part of what I'm going to focus on. And I don't want to use hindsight here. Okay. I would like to be very much forward looking. When I say volatility is good, we're going to give you a couple of reasons also that volatility is probably going to be with us for quite a substantial period of time. Tell you what, I don't have to really point that out to many of you. As I think most people, when I mention volatility is here to stay, they probably like, yeah, I kind of have to agree with that statement. But what you have to realize about volatility, you have to have the right skill set for it. And we're going to take you there tonight. And this is your opportunity. Okay, it's your time to shine. It's about volatility. Listen, this monkey, and I am speaking of myself, knows volatility trades. Okay, and you should too. So I couldn't think of a better way to delineate myself this evening. So the picture of the monkey with what it appears to be an iPad or a Surface, it works. Listen, I grew up around volatility trading. I've always traded volatility, okay? And we're going to talk about volatility type trades this evening. And it's again, these are critical over, what we're experiencing right now, especially if we're not necessarily hitting new highs or the market's not breaking down, and it's harder and harder, of course, to be able to find okay, opportunities in here. So I'll constantly reiterate this, that volatility is a very, very good thing. So that's again what we're going to be focusing on here momentarily. Let's get down to it. All right. Um, just checking out here. All right. So moving onward and upward over here. Let's have a little discussion of volatility, because this is where people sometimes get a bit lost. Right? Everybody with me right now? Okay, because now we're going to start to go down a little bit of a deeper path over here. When I say people get a little bit lost, they kind of get confused of what volatility is. Anybody have an idea? When you think of like volatility, what do you typically think of? Anybody? All right, we're going to make this, we're not going to make this just, me talking at you. These are not rhetorical questions. Jump in here anytime. When you think of volatility, what do you think of? All right. Most people think of like dramatic change. Most people think of, movement in the marketplace. And listen to me, that's not, okay, wrong. That's not wrong. But volatility, okay, is much more about risk than anything. I mean, volatility is risk. The term volatility is supposedly a softer way that Wall Street came up to generalize and say, here comes the risk. They came up with like the volatility index. Nobody ever calls it like the risk index. Okay. So this evening, I am going to talk a little bit about options. I hope that's all right with everybody. Not everybody here this evening has to necessarily understand options, okay? And I'm not here to shove options, in your face and so forth. All I'm going to say is that if you're trading in this marketplace and you have no understanding of options whatsoever, I really think you're doing yourself an incredible disservice. And I'm not here to say you must trade options, but options, okay, are now telling us so much about stock price movement. And that's what people miss. Options, okay, now are the cart leading the horse. And that's what people miss again about options. And let me kind of detail this. Listen, option markets can be they can be thought of as putting a price tag on risk. When I say that, like, you look at an option. For those of you that have never traded an option, who here has never, ever, ever traded an option? They're brand new to this, okay? And you're about to be swimming in the deep end of the pool. All right, it's okay, because we're going to just throw out a generalization here. You have a stock, and by the way, every single time that I do a fictitious stock, I must call it stock, and stock is trading at 200 bucks. We're not going to buy the stock. We're going to have nothing to do with the stock. We are just not going to own the stock. We're just going to go out and we're going to buy a call option, and we're going to look at a 200 call, okay? And that 200 call, let's say it's good for 1 week. The one thing you got to understand about options are time sensitive. It's good for a week. It's a 200 call, and it's going to be trading for a whopping $3. It's going to be trading for $3. Now, time out. What's a 200 call give you the right to do? Give you the right to buy the stock at 200. Okay? It's going to give you the right to buy the stock at 200. Do you have to buy the stock at 200? No. But why do you have a 200 call? Because you have the right to buy the stock at 200. What are you paying for it? $3. Here's the big question. It's good for a week, all that. Why is it trading for $3? Now, that's the thing that most people don't focus on. They just accept it's trading for $3. How did it get to be that price? Why is an option trading for $3? Anybody? Seriously, why is an option trading for $3? Okay? Because somebody always throws out, it's the Black-Scholes model. It's this, it's that. Why is this option here trading for $3? Anybody got an answer? Yeah, it's a little quiet right now in the webcast room, okay? Because in the end, it's always supply and demand, right? It's always supply and demand. So options are trading for $3 because that's what's been decided about the marketplace. The marketplace comes down to buyers and sellers. Like, people think that options are all about time value. They're all about volatility. They are. You know what volatility is? Volatility is risk. You know what risk is? Supply and demand. That's how it's determined. Options in the end literally move just like stock, supply and demand. If everybody demands this option, then the price skyrockets. If everybody wants it, okay, the price goes up. Think of some risky stocks. right? Think of some really risky stocks out there, and you'll realize real quick, the riskier the stock, the higher the volatility, okay? The more the option's going to cost. All right. What's volatility been lately in the markets? Okay. It's been huge by huge. There's been a lot of volatility in this marketplace lately. And has it abated a little bit in the last week? Maybe. We'll see. And we still have a very, very high volatility index, which, again, I hope you guys don't mind, but throughout the course of this evening, I may deviate and go to a live trading application from time to time. I reserve the right to bring up a live trade throughout the course of the evening, because listen, this is it's a live webcast here, and the volatility is still high. And you go, it's not that high compared to where it's been, really, because if you look back now over like the last 5 years, tell me that isn't high. Okay, it's almost double. In most cases, it's double where it has been over the previous 5 years. All right, onward and upward with that. What can this knowledge do for you? I say, what can implied volatility do for you? But what can this knowledge do for you? So for those of you that are a little bit newer, I'm going to take you into just a little perspective here of what's termed expected move. Now, I'm going to rip through this, okay? Because we're going to hit this again and again and again and again this evening. And this is really important stuff, okay? This is a slide that, no joke, I've been using the same slide for almost 20 years. Right? And this particular slide, the reason I haven't really changed it is because it's everything you need to know about stock price movement. So this is the stock price. It's a $100 stock. Okay. The volatility in the options. And it's not volatility in the stock. Volatility in the options marketplace says 20%. Okay. What does that even mean? 20%? Like, for example, a moment ago, what did we do? We looked at the VIX a moment ago, and the VIX was trading at around 23. Let's just round it. Let's say the VIX was at 20. What does a 20 VIX even mean? Well, that's exactly what I'm going to describe to you. So you have this stock, okay? And it has a 20% volatility. What that means is the stock is capable of moving up, okay, 20%, or down 20%. You know what 20% of 100 is? It's up or down $20. Okay. So when you see this, the stock is capable of moving up to 120 or down to 80. You're like, that's interesting. Okay. How does he know that? Because I looked at the implied volatility. Implied volatility. It's the volatility that is derived from the options marketplace. Options give us implied volatility. You know what implied means? All right, delete all this garbage off here. You know what implied means? Okay, it means the future. And people look at charts, they look at MACDs, they look at Fibonacci's, they look at Bollinger Bands. And the one thing that they fail to look at is, why not look at a live marketplace? What implied volatility gives you, okay, is a price tag on risk in the future. Here's your price tag on risk in the future. Your price tag on risk says we're going to go up 20 bucks or down 20 bucks. And the question is, should you look at it? I believe so. Why? Because, this is billions of dollars being traded in these options to derive this. Now, time out. You're supposed to stay in this range, up 20 bucks or down 20 bucks. You're supposed to stay in that range 68% of the time. Where does the 68% come from? That's what we term one standard deviation. Right? Everything you do in your life can be broken down into like standard deviation. There's really, really good drivers, which are up here, they're rare, and there's really, really bad drivers, all right? And then there's like Los Angeles, which is somewhere down here. But if everybody in Los Angeles is a really, really bad driver, then everybody actually fits into the meat of the curve. The point that I'm making with this, okay, is if the stock goes from 100 and the stock goes, all the way down to 40 bucks, you go, you were wrong. It's not wrong. It's just improbable. Think about that for a second. So what options are doing, options, okay, the best way to think of an option market is handicapping risk to the future. It's giving you this range. It's like, hey, we're supposed to move like X amount higher, X amount lower, and it's a party in there. Are we okay? Now, the other aspect of this that I want to make very, very apparent, this number here, this plus or minus 20 bucks, that's good for what period of time? 1 year. And you go, oh, Well, that doesn't really help me all that much. Like, who cares, man? It's a year from now. Okay. I don't know where I'm going to be a year from now. Good. If you actually divided this out, could you divide it out and figure out how far we move every month? Yes. Could you actually divide that even further and figure out how much we move every week? Yes. Could you divide it out even further and figure out how much we move literally every single day? Yes. Then why are you not using this? Think about that for a second. I can tell you how far. Options will tell you how far the stock is going to move for a day, for a week, for a month. This is what people have to learn about. Okay. And that's why I continue to stress this. Like, this is the stuff, okay, that is often missed by most participants in the market. And it's called expected move. Expected move, okay, tells you how far the stock can move within a given period of time, right? Now, tell me a really volatile stock. Seriously, tell me a really volatile stock. And everybody always has the exact same thing. Whenever I say, give me a volatile stock, what do they tell me? Come on, throw your stocks in there, throw your stocks in there. All right. The first several that have come in, Tesla, Tesla. Okay. So that's it. Only a handful of people. You guys are a quiet bunch. Come on, people, make some noise. Here, look, I took a screenshot of Tesla. Why? Because every time I ask this question, somebody goes, it's Tesla. And I go, oh, Tesla's a volatile stock. All right. Oh, I like that one. Two more people just came in and said NVIDIA. We'll look at NVIDIA in a second. Oh, somebody came in and said Zoom. All right. I like it. I like it. So let's start with Tesla. Here's Tesla. It's a $400 stock. Who cares? Who cares? You know what it is? It's a couple of symbols with a volatility. You ready? In the next 2 days, right here, the next 2 days, Tesla's positioned to move plus or minus $16. 37 days from now, Tesla's positioned to move almost 70 bucks. How many people, okay, use this on a day-to-day basis? By the way, this platform that I'm using right here, this is Thinkorswim. This Thinkorswim is now owned by Charles Schwab. It was TD Ameritrade. TD Ameritrade, of course, is now merged with Charles Schwab. So this is Thinkorswim. This is where I worked for the better part and worked on the trading application for the better part of about 15 years. And one of the things that we built while I was there was undoubtedly, of course, expected move. And it's so easy to take advantage of this. And most trading applications now have it. E-Trade has it. Thinkorswim obviously has it. I mean, almost all your major trading applications have some form of expected move. And so few people use this stuff. And by the way, somebody said, like, why not, why not look at NVIDIA? We can look at NVIDIA. There's no problem whatsoever with looking at stuff live here, right? We're live. All right. So 9 days from now, I tighten this up a little bit. 9 days from now, NVIDIA is looking like almost a $45 move. You know how much like knowledge that is? Listen, knowledge is power in here. The option marketplace, and again, don't, you look at this, you're like, whatever, man, nothing matters. Okay. There's thousands and thousands of option contracts. You ever look at something like Apple? Today was a rather slow day, but Apple has, look, 33,000 contracts trading here. Okay. There are billions of dollars being traded in these options. And all of those options averaged together say that Apple is supposed to move $5.50 in the next 9 days. So my question is to you, should you pay attention to this? I think so, because billions of dollars, okay, have a degree of accuracy. And that's the point to be taken from this. Now, this is just looking at an option chain. This is the study. This is auto expected move. This is the indicator that I was talking about to you earlier. And the reason that this is so important, okay, is what you're seeing here, these 3 lines on the screen. That's it. That's what I was just showing you a minute ago. It says plus or minus, for instance, 20 bucks, or, plus or minus, for instance, $49. That's what these moves are. It says we're supposed to move up or down $49. So your question, and everybody's question for years, did we really move $49, or did we really move 20 bucks? Everybody's asked me that, since I've, looked at expected move. Did we over here, we were supposed to move, we were supposed to move $25. How much did we really move? Well, instead of moving $25, this thing moved from what? Okay. Oh, about 75 bucks. That's a 3 standard deviation move. It's absolutely ridiculous. What this chart lets you do is this chart lets you take what you saw numerically, okay, and it applies it directly to the chart. And it shows you, okay, literally what is exceeding the expected move. If we're supposed to move up or down 20 bucks, okay, we don't move 20 bucks. Let's say we move 40 bucks. Is there a trade in there? Anybody? Is there a trade in there? You're supposed to move 20 bucks. You don't move 20 bucks, you move 40 bucks. Okay. Is there opportunity in that? And that's where I'm trying to get you guys to kind of understand. So we have to understand right now where edge in the marketplace can be achieved, because people, there's all kinds of different definitions for edge. Okay. The definition that I am trying to provide to you, okay, is a very, very simple idea with some complexity behind it. And the edge is kind of like this, right? Let's look at Apple for a second. Apple says, I'm supposed to move $5, okay, and 50 cents. But at the end of 9 days, Apple does not move 550. Apple moves a full $11 move. It moves literally 2 times what it was expected to do. Is there edge in there? And the answer is unequivocally, of course, because all these options in this chain are priced for a $5 move. But you don't get a $5 move, you get an $11 move, okay? And that is golden. And that's the kind of thing that we are going to help you with, okay? Understanding the concept can be helpful, but we're going to go a lot further than that. So what to do with this? You know, like people, the first time that they see a little bit about expected move, okay, is, and again, by the way, this can be used for a day. People are already asking, like, can I use this every single day? Of course you can. You go right into the spiders, which have options expiration on a Monday, a Wednesday, a Friday. There's so many uses for this, so many uses, because everybody comes here. That's a party, man. How do you use it? How do you use it? There's a lot of different ways to use expected move. Okay. Tonight, we're going to bring up a big one. Listen, understanding implied volatility, understanding expected move, it's all a step in the right direction. But how are you actually going to take this stuff, and how does this stuff translate into profits? Like, how are you going to take expected move and translate that into a trade and translate that into profitability? Because, anybody can go out these days, and I'm being really serious like this. You can go out and hire a quantitative trader. Okay. I am a quantitative trader. And the quants will actually tell you, like, hey, this is where some edge lies. Very few quants can translate that into profitability. I'm actually going to bring you into a trading concept that less than 1% of market participants are aware exists, right? So not that many quants, look at this stuff, okay? Even less though, figure out how to trade the concept. Know your volatility. And I'm going to make this very easy, okay? Conceptually, I'm going to make this easy, and then we're really going to dig a little bit deeper and talk about finding the edge, okay? What I'm starting to bridge the gap into here is there's 2 types of volatility, right? When I say 2 types of volatility, literally there's 2 types of volatility. There is implied volatility. Implied volatility is what I just talked about moments ago. It says, like, for instance, the expected move equals plus or minus $5.50. Remember, that was Apple, AAPL. Okay, that was Apple approximately 9 days out. Okay, so that's the implied volatility is screaming, this is what we're expected to do. Number 2 is historical volatility. That's the annualized standard deviation of past act price movement, yada, 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 yada. Historical volatility is actual price movement. So once again, we were supposed to move 550. We didn't. Okay. Looking back at this, all of a sudden the stock, for instance, moved even $12. Okay. This is real, all right, moves. So it was implying that it was supposed to move 550. It did not move 550. It moved $12. Okay. Great. If you understand that option markets, they're efficient, but can be wrong. and that actual price movement can exceed what was implied, we're going places. Because now we talk about finding the edge. What if markets continually moved big, but the option markets did a really poor job of pricing in a lot of those larger moves? How could we go about finding stocks that are moving more than what the option markets expected? Enter the expected moves. The auto expected moves visually display a stock or ETF smashing through what the options market expected. So you start to get lost in some of the verbiage here, but whatever. In other words, you can literally see a stock moving beyond what it was supposed to, right? And you know what? I sometimes I don't want to get lost in the definitions. Let's just show you. This is the IWM. How many people here are familiar with IWM? Come on. This is where you say me, right? IWM. So if you're not familiar with it, you're going to be familiar with the IWM, just so you guys know. It's just the Russell. So it's the Russell ETF. It's the RUT ETF. All right. This is the RUT ETF. See the Russell this week? See the Russell last week? See the Russell the week before that? The point that I'm going to make, and it's very simple point. The Russell is supposed to stay between the lines. It cracked it to the downside. It cracked it to the upside. It smoked it again to the upside. The week ain't even over. Okay. Remember, you're supposed to stay in these lines. How often? 68% of the time. Are we staying inside those lines 68% of the time? Not even close. The Russell, people, it was totally flat up here. Breach to the upside, breach to the downside. It is one of the more wild products, okay, on the street. Now, I found you the Russell here because I actually trade the Russell a significant amount, specifically because the Russell is such a wild animal, okay? But I can bring up underlying after underlying, and I can actually apply what we call auto expected moves. Now, this is a script that we're providing to you. This is a script that we're going to provide to you tonight at the end of this webcast. And that's why I say, you want to stay tuned to the end of the webcast here because you start looking at this and you're like, well, okay, let's look at Apple. Like, is Apple doing anything crazy? Look, Apple, mellow. That one broke outside last week. Kind of mellow. Mellow. This one, ooh, it's a little bit. This one over here, it had earnings and it still stayed inside and still stayed. I mean, the point that I'm making is Apple isn't doing squat. Okay. If you look at something like Tesla and you're like, oh, but Tesla's crazy volatile. Yeah, but if it's crazy volatile, it's already being priced in as crazy volatile. And you'll see it is being priced in as crazy volatile. You got to look in places, okay, that people didn't necessarily know to look in. You got to look at things like the emerging markets. This thing's been smoking through. Okay. You got to look at things like IWM. You got to learn, right? Real quick. This, people, is where edge is found. This is where edge is found. IWM should stay inside these lines 68% of the time. Recent weeks, months, it's been smashing through. Okay. And the opportunities there are massive. Why? Okay. It's all about outliers. This is what we're going to go after. This is what we're going to trade. We're going to take the other side of risk. When it says, when people are like, oh, the humanity, the risk is too big. You want risk, bring it. Just keep bringing more and more of it. It's fine because that's what we're looking for. Outliers, okay, are a very good thing. And again, it's an unusual position to even talk about. When I say outliers, I don't even know what that means. You know what it means? Okay, oddball events. Wild things. Does it happen continuously every single day? Absolutely not. Okay. But they're not being priced in very well. The marketplace says, okay, and again, this is the point that I want to make. The marketplace here says I'm supposed to stay inside here. I'm supposed to do what I was told. I'm supposed to stay inside this range. The next thing you know, we're up here, we're down here, and it's a party. And that's all we've been doing. Okay. For what? 2020 has been the outlier of all outliers. People will be talking about 2020, okay, for 200 years. Listen, implied volatility opportunities. If you have losses, shake them off. This is the time to make money. There are very few opportunities in this business that present themselves as prevalently as what we're witnessing right now with the Corona crash, the fallout, you need to get ready, okay, for these events. Positioning your portfolio for a big move. Let's get down and dirty. How do you position yourself most effectively for the possibility of extreme movement? But at the same time, like, I'm waiting for the big move, but I don't want to absorb risk. I don't want to expose myself to drastic risk. And you can't get cute, okay? Because you don't want to get your head lopped off, and there's potentially billions up for grabs, okay? Now I'm going to start showing you a couple of trades, but hang with me as I start to show you trades here. People, listen, some of this gets a little bit more complicated, and I'm showing you trades right now intentionally from months ago. I'm going to show you trades from an entire history line, okay, of my own trading. I, okay, am an outlier trader. I like to put on these outlier trades. It's not all I do, okay, but I like to put on outlier trades. And I want to get you comfortable, okay, with understanding this and how to profit from some of these outlier trades. So I'm going to give you a little history lesson here on some of the outlier trades. I recognize this is back in March. I'm going to take you from March, okay, forward in time. I'm going to show you trades that were just a couple of days ago, a few weeks ago. I'm also going to show you trades from 5 years ago. I'm going to take you again, a little history lesson of outliers. This is an IWM backspread, okay? And what a backspread is designed for wicked moves to the upside or wicked moves to the downside. That's it. This particular trade is put on for a 20-cent credit. Now, if you do not know options, what I want you to see in this screen, it's the exact moment in time I put the trade on, the exact moment in time I took the trade off. Just so you guys understand, okay, I was living in Arizona, and this time of the year, Arizona is actually on Pacific time, so this is Pacific time, okay? I am not currently living in Arizona. I am living now in the Virgin Islands, and we're on Atlantic time, so I'm an hour later than most of you, except some of you that are possibly over in England, or I think there was an Aussie in here too. It's late in England. I put the trade on for a 20-cent credit. I closed it for a $6.48 credit. A timeout. The trade has risk. We'll discuss risk as we go along. Okay. But somebody asks, well, that's nice. You made money on a trade back in March. That's just great, Don. You made money in a trade back in March. What was the setup for it? The setup for the trade, okay, really, really straightforward. Here's the Corona crash, all the fallout. We had an absolutely wicked, violent breach to the downside, violent breach to the downside. I mean, just hideous, violent breach to the downside. So what I basically did is I said, well, eventually we're just going to pop back to the upside. And well, I put on a trade for that. That's it. Okay, look, I put on a bullish trade. And within 3 days, we popped back to the upside. Okay. But I did it again. And I did it again precisely a month later. And the reason I'm showing you the IWM back here is it's the easiest thing to kind of, point out to you. We kept having these hideous breaches to the downside like this. And it's only a matter of time. You keep breaching to the downside, we pop back. Okay. And again, this is not about support and resistance. It's nothing of the kind. It's about inefficiencies in the marketplace. So you're seeing one trade, okay, one trade where we're looking for this big pop to the upside. The next trade, it's looking for the exact same thing. I go back to the well and I just do the same trades again and again and again and again. And less than a month later, there was another outlier to the upside. And again, I just want to reiterate that because is it a rare thing? In the IWM, the answer is absolutely not. It's not a rare thing in the IWM. It happens continuously in this particular product. There's ample setups. Now, here's the IWM spread. By the way, all of these trades, okay, and I'm just showing you, all of these trades are done live in front of our clientele here at TheoTrade. Closed, IWM yesterday for 438. Okay. There's another gentleman that actually closed this for 202. It varies. People are getting various prices over here, onward and upward. Okay. Now, this is the TLT, it's bonds. I'm just showing you, and again, a couple of trades from this summer. This bond trade, there was a wicked breach to the downside, once again, by a wicked breach to the upside. So When I look at this, the breach lower led to the breach higher, caught both moves. Here's actually a trade that I put on. Again, this is in bonds. Bonds are a slow moving animal. This is a trade I put on for a 32-cent debit. I made 98 cents, but net, what did I really make on the trade? Okay, and again, this is kind of what matters for those of you who don't know this, but put it on for 32 cents, close it for 98 cent. I mean, net, what do we make on the trade? Let's call it, after commissions and everything, let's call it 60 cents. 60 cents doesn't sound like very much, but it's huge. This is the bond market. It's a very slow, again, a very slow moving animal there. So I caught one of the bond trades to the downside. Then I immediately flipped over. Okay, when I say immediately, okay, look, I closed one trade on June 3rd. The next trade was put on June 5th. And this one I put on for a 25-cent credit, closed it for a $2.10 credit, right? Now, enough, okay? When I say enough, listen, all I want you to understand is the concept of, and again, we're going to go through a bunch of trades here, okay, in a moment. I just want you to understand the concept of these wild breaches in the marketplace at this point, okay, that look at the IWM. And I got to tell you right now, okay, do not have this trade on right now in the IWM. I actually have the same trade on in the NASDAQ. Okay, and I can show you any position here. I don't have it in the IWM. I actually have it in the QQQ in the NASDAQ. And I'm a little bit furious with myself. That's okay. That's trading, right? That's trading. Am I going to hit every single opportunity? This is actually one that it hurts. It hurts people because that is a huge opportunity. The point that I want to make with that, the future is bright and it's just filled with risk. Now, I'm not suggesting, I never have suggested that you can time wild or unforeseen moves. Nobody can see the future, but I am suggesting if you place the correct options-based strategies, it's going to make all the difference out there. Listen, you could be 2 trades away from this, and this being, and I'm going to show you the next screen. And the next screen, don't panic because I'm going to explain it a little bit. This is what we term an infinity spread. And the design of the infinity spread, okay, is to actually trade on both sides of the market, okay, simultaneously. The infinity spread has 2 major components. There is an upside component and a downside component. And the infinity spread is really by design, okay, made for substantial market movement. And if you have substantial market movement to the upside or to the downside, okay, there will be profit. There is profit out here, okay? There is profit out here. In here, the loss, right, is minimal. It's a very minimal loss if we stay range bound. But I have no problem saying that because what you do in this trade is you go out and you might take a very small loss and may take a very small loss and take a small loss and all of a sudden have like a plus $9 winner, okay? That is the plight of the infinity spread. The infinity spread, it doesn't make money every single time you put it on. It doesn't have to because it is that powerful of a strategy. One of the things I want to point out over here is you're looking right now at a whopping 2 contracts. Anybody, okay, is going to be able to do 2 contracts here or 2 contracts. This is a VIX spread. The 2 contracts. That's it. 2 contracts. You do 2 contracts of this trade, okay, and the market breaks to the upside. It's $1,000. It's $2,000 of P&L. When market breaks to the downside, the P&L can be huge, and it's only 2 contracts. Can you imagine the exposure if you have like 10 contracts in there? It's a multiplier. Okay, it's 5 times as great in here. Instead of $1,000, it's $5,000 and so forth and so on. Okay, it is an incredibly powerful trade that you can put on, and I'll explain it in a bit more depth here. Okay, as we kind of progress on. But the one thing I want to show you is so. It's great. Like I bring this trade to you and I'm like, it's an infinity spread. I'm not going to leave you hanging here. I've been trading infinity spreads, okay, for well over a decade at this point. And I'm going to show you some of the history of my trades. So here's my trades. The proof's in the pudding, people. I'm going to display a number of key events. Okay. Almost every single large event in the last few years, okay, I'm going to bring it up to the surface. And I'm going to show you where markets and volatility did not effectively price risk. Thereafter, I'm actually going to display current trades. Okay. So I'm going to give you, when I say a little bit of a history lesson over here, I left the brokerage world in 2015. So here's by the way, a quick heads up. When you work for a brokerage firm, which I did, and I ran education for both Thinkorswim and TD Ameritrade. When you work for a brokerage firm, you cannot display your own trades to clientele. Okay, it's part of the regulation. By the way, I had Series 3, my Series 4, my Series 7, my Series 24, and my Series 66. And the 66 is, what is it, a 60, 63, and a 65 combined. So I had pretty much every license out there. You can't display, when you work at a brokerage house, your specific trades. So here, the history lesson starts in 2015. So as I said, I'm going to start all the way back in 2015, show you every major market event. And every major market event, I hit huge degrees of profitability. Okay. Then I'm actually going to display 2020. And I'm going to show you a couple of trades I did here in 2020. It's more than that. 2020 has been by far the single best volatility trades ever, by far. It's not even close. And that's why I'm actually showing you a little history over here. So I'm going to rip through these quickly. This is the Chinese yuan devaluation of 2015. In August of 2015, China made a snap decision to actually, go in there and devalue the yuan, which is, of course, their currency. Volatility tripled inside of 3 days. This is my P&L from those 3-day period. Now, listen, at this point, I wasn't exactly trading huge over here, but this is exactly a 24-hour period. If you follow me down to the bottom of the screen, and I apologize, it's small. In that 24-hour period, I made $17,399. Okay, not exactly huge, but I'll tell you what, nobody saw this one coming. It was just basically, it was 2015. It was kind of quiet. Smack! 24-hour period goes by. I made $17,400. Onward and upward. 2016. In 2016, this one was actually big. This was a big sell-off, and this is the spiders. This was a big sell-off inside of the S&Ps. Volatility doubled, but this actually lasted a full 2 months. So I'm actually going to show you my P&L in that time frame for the exact time that went on. Here we go. So this is what we called the taper tantrum of 2016. Okay, the markets did not like that they were actually going to start cutting back on quantitative easing. A lot of you probably remember this. This is exactly from January 1st, 2016, to the end of February 2016. And if you take a look at my P&L, this is P&L year to date, right to the bottom of the screen, I was up $103,000 in change inside of 2 months. Okay, that, people, that's good trading. And everybody, of course, asks like, well, how much money did you tie up? Well, that's right here. That's called my margin requirement. I had to tie up $204,000, in this period of time to make basically 100 grand. That's trading, right? Moving on, another big volatility event, Brexit. By the way, 2016, I thought 2016, it was like Christmas 3 times during this year. Why? Taper tantrum happened in early 2016. Then we had Brexit. Brexit hit, volatility spiked. When Brexit hit, and again, this is just, Brexit was a flash in the pan too, it was fast, right? I had outlier trades on. This is actually from June 23rd to June 24th, 2016. Follow me to the bottom of the screen. I know it's really, really small. It's because I had to pack the entire account statement in here. I was up $25,000, $201.13 inside of a 24-hour period. Because this was a huge spike. It was unexpected in there. As I said, 2016, it was like constant, volatility. So we had obviously the taper tantrum, the taper tantrum, which then had Brexit, and then of course led to the presidential election of 2016. Yeah, that was 4 years ago now, people. What did I do? Well, this is the first time I'm actually showing you specific trades. These are actually copy and paste the last presidential election, and I've got a couple of trades on that are still working right now. So I don't want to leave you with the notion that we're not doing well, because I'm going to show you that here in a moment. The last presidential election, though, was huge. In a 24-hour period, Here's a back spread that I put on for a $2.65 credit. I closed it for a $19 credit. Okay, this is another infinity back spread. We're actually put on what, November 8th, closed it. November 11th, 70-cent credit, closed it for a $30.75 credit. These are actually options on futures trades, options on futures. All right, there's three events, again, three events during 2016. And you're like, so what? Okay, great. Nothing happened in 2017. It was a dry volatility year. Now we're coming into 2018. Again, I told you I was going to give you a little history lesson here, because these events, you have to realize, like, these events are so big. It only takes one good volatility event all year long to make your entire year. Like, when you take a 70-cent credit and turn it into a $30 credit, you don't have to do a whole hell of a lot of contracts to make that, okay, a living. Like, you don't have to be there sitting in front of the screen all day long. You just have to be in there for these type of events. How do you do that? Put the trades on constantly. All right. Now we're going to go to 2018. 2018, this got interesting. This is what they call the VIX explosion. This is volatility was at 12%. We had the single largest volatility percentage moves ever recorded in history. The spike was phenomenal. What did I do? I actually did what is termed, okay, a risk twist spread, which is an infinity spread. Okay, the infinity spread. This is the exact date and time I put it on. That's the exact date and time I took it off. Did I know that there was a massive spike in volatility coming? Absolutely, unequivocally, no. I had no clue. Like, I don't want people like, oh, you knew something was going to happen. You didn't know anything was going to happen. I put them on all the time. I put this on for $1.37. I closed it about a month later for a $10.58 credit. That is absolutely huge. Okay. And again, right place, right time, absolutely not. I go out there, and I talked about this a little bit earlier. I go out there and I will constantly risk $1. Then I'll risk $1. And I'll risk $1. And then bam, make 10.58 on it. Okay. You don't have to do this a lot. Okay. This is a trade that can last. Look, here I am in January putting a trade on for late April, right? How many of those do you have to do a year? 3, 4, maybe 5 at most. Risking $1.37 to be able to make 10.58. It's not bad. So that's the volatility event in 2018. Gets better. In late 2018, again, in late 2018, this is another big volatility event. And I didn't even catch the best part of this. In late 2018, right, this was actually a big Fed scare. Here's my trade. I hit another risk twist. This is actually September 20th, closed October 11th. I closed my position earlier. I took $1.20 and turned it into $6.59. It is absolutely huge. Okay. Now we're going to come into current time frame here. Everybody okay at this point? We're going to come into current time frame. There's one more trade that I will display to you, and it's not exactly the most popular thing to talk about, but when I worked at the brokerage firm, obviously I worked there during the financial crisis. The financial crisis is not a popular thing to talk about, simply because people that profited from the financial crisis, they're like, oh, yeah, listen, I had one of these trades on through the financial crisis. It was a devastating time. It was an interesting time. But what I actually did at that particular time is I turned around and I invested the money. Okay. And I actually bought my house in Scottsdale at that particular time. And this is where, when I work at the brokerage firm, you can't actually show specific trades. So here, this is the way I'm showing you my trade. I actually bought the house not in 2008. I bought the house in July of 2010. Here, I don't mind showing people. I paid 1.3 million bucks for my home in 2010, and it's worth about 2.8. I think that would be a deal at this point, but it's worth about 2.8. I think it's probably over 3 million bucks at this point. Nevertheless, that's what I kind of call my financial crisis trade. And again, it's not the most popular thing to discuss over here, but it's a risk twist spread. By the way, if you want to see what a $3 million house looks like, it's a $3 million house. And I'm going to tell you right now, that $3 million house is completely empty because I am currently living in the US Virgin Islands, because Scottsdale wasn't exactly the greatest place to hang out during the pandemic. So it's what every $3 million house needs to have is a movie theater and a basketball court. But here's even the more fun one. Here's my what I call my pandemic trade. I took the basketball court and I only did this this summer. This was just done this summer. There was a gym down the street from me that went out of business, and I bought the entire contents of the gym. By the way, I'm sorry about this. You can see when I took this picture, they were still laying the paper. They were laying the paper because they had to repaint the entire thing. But I bought every single piece of equipment for an entire gym. That was my pandemic trade. And then after I was all finished putting it down there and repainting the entire house, then I packed my bags and actually got on a flight and came to St. Croix. And now I work out in a gym that is horrible comparison to that one. And you can't make that crap up. Now I'm going to show you recent trades because 2020 has been by far and away the best year ever for infinity spreads. The opportunities are now. Listen, this is what the infinity spread, as I showed you earlier, looks like. First, you should be aware of what's possible in the extreme. The account that you're looking at right now, okay, is an IRA. So I'm just going to take you through a little bit of history over here, what's possible in the extreme, and then I'm going to show you some specific trades. Here we are on February 23rd, the good old days before the corona, okay? This is the beginning of the volatility event. So I went from $211,000 in a week to, by the way, this is the way that Thinkorswim presents to you, if you will, what's called net liquidating value. It's a 5-day net liq value. It actually shows you each individual day and exactly what your P&L is. Okay, here's a week that I was up, well, from $211,000 to about $248,000. Then I took another snapshot a month later. A month later, I had the account up to 305. Okay, this was not as good of a week, but it doesn't matter, whatever. I'm just showing you, glimpses in time over here. The count was then up to 308 at the end of the week. Moving forward, this is actually this summer. Okay, in the summer, July 24th, I was actually at $392,000 up to 392. Again, this week wasn't exactly anything stellar over there. Okay, but I'm not done. I'm not just going to cut you off at July. Okay, then we'll actually move forward until October. And I was just going to show you there was a lot of volatility the last couple of weeks. So we're not to the end, obviously, of November yet, but here are, again, consecutive days. This is really obviously recent. I was up to $538,000 on October 16th. Clearly, volatility hit. And by October 20th, I had us up to $550,000. I say us, it's my account, my wife's. So it's my IRA. And then it's obviously my wife listed on there as well. Okay, I'm terrible at actually, going in there and saying it's mine. I get corrected almost on a daily basis of that. And then of course the following week. So the following week is October 24th, where and people look carefully here. I don't want to, listen. There are days where here, this is obviously a weekend. There are days where I'm up. There are days like, look, that was a $5,000 hit that particular day. And then of course, coming into October 28th, this is, again, it's an IRA. That is a magnificent move. All before the time of the election. The volatility was hitting before the election. And I'm actually going to show you a couple of the trades that led to this, because I just wanted to show you what the extreme holds, what extreme looks like in terms of profit and loss. Okay. Every trade I'm talking about can be done in an IRA, but I'm actually going to show you specifically how I drove, okay, the P&L from the onset of coronavirus to right now. This is actually going back, just a little history again, TLT. This is when I put on for a 12-cent debit, closed it for a 350 credit. Okay, this is what our clientele are saying. Just read you this one. Don, I closed the TLT risk twist spread for 127% gain. Price was moving around so fast, it ended up having to do a market order. Pretty excited to see what the whole risk twist trade cycle and how well it worked, from Vicky W. Onward. Okay, this is the SPY Infinity backspread. This is actually from 2019 coming in 2020. Here's one that I put on for a 3-cent credit, closed it for a $3 credit. Then we come to a VIX volatility spread. And again, I just want to make a point about this. At this time, we didn't really know what the coronavirus was. Everybody heard about it on the news by January 17th, but I already had the position on. Okay, I closed it just over a month later. I put this position on for 0. Closed it for a $3.75 credit. That, people, is huge. That's what a VIX volatility spread can do for you. Onward. This one is actually done on Tesla. I just threw this in here because it was kind of fun. coming into again to 2020. I put one of these on in Tesla for a 20-cent debit, paid 20 cents for it. Okay, closed it for an $11 credit. I did quite a number of contracts over here, and right after this trade was done and closed, yeah, I did go out and of course, invested in a Tesla. I couldn't think of anything better to, of course, do with this. But by the way, my Tesla comes with one of these. Yours might not. And the Tesla is sitting right here inside of the garage, not being driven for the next 6 months because I left it. I left it plugged in. It's what I call putting your trading account into ludicrous mode. By the way, if you have the ability to get one of these vehicles, I urge you to do so. It is literally like I've owned everything, and that thing is incredible, literally incredible. And now I'm back to driving a Jeep Wrangler, which kind of got flooded out here this morning with almost a foot of rain in the last 3 days here in St. Croix. I'm not painting a good picture for this island right now. Here, next trade. Now we're going to get serious. This is 2020. Okay. These are the trades I actually did that actually drove my IRA. All right. This is what drove the IRA. This was put on January 14th, closed. Again, coronavirus wasn't that big of a concern. I closed it too early, but I still took $1.80 and turned it into 1053. It's a 485% return. Just so you know, every $180 you invested, you got back 1,053. You could have done this and said, hold on, do you have to go out there and do $180? No, you could do $1,800 worth to make 10,530. Okay, that's fine. It's, however many contracts you're comfortable doing. I think $180 is pretty negligible risk. The next one, okay, here we are, XLF. Again, I had no idea. No one knew what a coronavirus was. Okay, December 20th. That's when that trade was put off. Okay, and I should say put on. It was taken off, early. Every $36 I invested, I got back 135. It's a 275% return. Again, didn't know anything about, coronavirus. Taking it off, I kind of thought it was going to be a little bit of a flash in the pan. I wasn't sure what was going to happen. Now, XHB. Here's another one. Okay, quite frankly, I took it off early. I paid 53 cents for this, took it off for 362. Every $53 I invested, I got back 362. It's a 583% return. The first snapshot I showed you of my account was in very large part, this was one of the big trades in there, okay? And this one, I did some size. And again, if you do 10 contracts, it's $530 to be able to make 3,620. You do a little bit more size, $5,300, add a zero to this, okay? These things are huge trades. Like you think about like the P&L. All right, moving on. This is the XLU. The XLU, I'm gonna tell you right now, this is like, almost the granddaddy of them all. Again, this is what drove my IRA. Every $96 I invested, I got back 1,272. It's a 1,225% return on this particular strategy. And again, here's where I'm going to tell you, I took off a bunch of strategies, okay? I didn't know what a coronavirus was, but I left this one on. And this is when volatility really kind of hit the fan. This was huge. You realize if you did $960, this would have been a $12,720 like return. It's big, okay? All of these trades, again, I just want to show you guys, all of these trades are being done specifically in this IRA. And I don't mind showing anybody, like if people are curious, like, well, let me see. Look, I'm going to pull up XLU. Okay, I haven't done that much in XLU recently, but let's go back a full 360 days in here. Okay, let's do it. Just go back because you people want to see where are you pulling this stuff from? You want to see? This is my live trading account. Okay, this is my live trading account, and you can see everything that I was doing in here. Every little nuance. Pulled some off for 12, pulled some off for 5. This is exactly what I paid for the strategy. It just goes on and on, right? I can show you every detail, again, of every trade. And that's why I like to show and like to bring up a live account from time to time. This is an EEM backspread. This is actually coming in the summer. This is put on for an 18-cent credit, closed for a $1.07 credit. Doesn't sound like a lot. Oh, I only made $1. It's not even a $40 stock. This isn't a big behemoth. It's a $37 stock at the time I was trading it. This is the XLF. The XLF at the time I traded this was a $22 ETF. I put this trade on for 0, closed it for a 51-cent credit. Okay. Here's one I put on XLF again. put on for a 25-cent credit, closed for a 26-cent credit. And again, that doesn't sound like a lot. You made 50 cents with basically negligible risk. Okay. You do a couple of contracts of this thing, you realize you're like, there's 5 grand here, 5 grand there. It's huge. It adds up pretty quickly. Look what our members are saying. Okay. John Haggerty, 570% return onward. XLF back ratio was a nice winner. Don, new here. XLF and Baidu back ratio is batting 1,000. Closed to XLF. Thanks, Don. Okay. Got out of XLF at 204. These are all people that literally joined us in this particular trade. All right, this is an XLE. This is the energy sector. Again, I'm just showing you exactly the trades that I did to drive my P&L to what you just saw a moment ago. This is June 2nd, taking off June 5th. Every it's a 5-cent debit, okay? Taking off for a what? $1.35. Now, time out. There is risk in this trade, but it's nominal risk in the trade, okay? And you're paying like $5 for a 1 lot in here. Anybody can do this with a $2,000 account. You can do this trade, and clearly you can do it inside of an IRA. Here again, TLT, I showed you this trade earlier. Put on for a 25-cent credit, taken off for a $2 credit. Next, Roku. Let me show you, people are like, well, what does a losing trade look like? Let me show you what a losing trade is. This one was actually put on. It was put on for a $2, okay, credit. It's a $2.05 credit. By the way, they show it as a minus credit in here. That is correct. It should be a minus credit because I'm buying the back ratio to open for a credit. It was put on for a $2 credit. This was a put spread, which means, okay, I was bearish. I was looking for a down move. I didn't get a down move. Roku flew to the upside. Guess what? I was able to actually close the spread for a 38-cent debit. Did I still make money? Yes, I did. I still made, okay, over $1.60 on this particular trade. I made $1.60 on a trade and I was dead wrong. Dead wrong. In fact, on this one, I even threw the chart in here because I did the trade back in this neighborhood. Stock went straight up. Again, if you take a look at the time of the trade, it was put on 619. So where's 619? Right back here. Couldn't have been more wrong. The stock went straight up. What happened? Okay, closed it profitably. Microsoft. Here's a Microsoft back spread. Put on June 3rd, taken off June 23rd. Every what? $76 credit, taken off for a 540 credit. Next on the list over here. Well, here, John Nolan. I sold Microsoft back ratio for 550. I just want to show you this. That guy one-upped me because I only got 540. Omar got 587. Okay, Jurg pulled out $200-300 range, worked like a charm. This is silver. Okay, here's a silver back spread where again, this people is a losing trade. I put it on for a 23-cent credit. I closed it for a 3-cent debit. I still made 20 cents on a losing trade. Okay, still made 20 cents on a losing trade is a good thing. Now, here's a QQQ back spread. All right, time out. At this point, I'm going to tell you the QQQ was absolutely on fire. So I switched from trading this summer, right here. I switched from trading this summer from the IWM. I actually shifted all of my allocations, okay, into terms of back spreads into the QQQ. I went QQQ hog wild. By the way, that turned out to actually bite me, but I'll talk about that in a minute. This is a 52-cent credit closed for a $6.29 credit. That is, again, it's huge by huge. Never. I just showed you the history of trading. 2015, I had one, huge trade. 2016, 3 big trades. 2017, nothing. 2018, a couple big trades. Do you realize how many of these spreads we've hit in 2020? Okay, it's ridiculous. Okay, here, June 24th. Thanks. Out for 752. Don, you're amazing. Okay, made $1,458 today with the techniques learned at TheoTrade. Okay, nice profits. Have a great weekend. Moving on. Again, I pushed allocation towards the QQQ. Now, again, I'm showing you a trade here. I didn't make money, but I didn't lose money either. This is a losing trade. I put it on for an 87-cent credit. I closed it for a 65-cent debit. I don't mind showing a trade that's a losing trade. The trade, though, still brought in, okay, a small degree of profitability in here, okay? Now, here we go. This one, this is actually the single largest back spread that I have ever had inside of the QQQ. I put it on for a 71-cent credit and closed it for an $11 credit. You realize if you had actually done this thing 10 times, okay, put it on for a $700 credit, okay, think about how the P&L works, right? You're looking at like $11,000 plus the $700 you initially put on, okay? It is huge. The risk in here, so nominal. just so nominal. The only problem is, okay, because I put this trade on here in the QQQ, I didn't have the one on over in the IWM, which also would have been phenomenal. But this is huge P&L. That's actually what brought me, okay, up so substantially throughout the course of this year. That's why I said, you want to see the extreme? This is the extreme. It's again and again, we've had just phenomenal back spreads. Listen, what our members are saying, this was July 13th. I just grabbed a couple little things from the chat room here. Daniel Fabian said, hey guys, new member here, been lurking, okay, the chat for about a month, was short SPY. TheoTrade is the only membership that I've ever had that pays for itself and then some. Brent W, you won't find a more supportive and more profitable room anywhere in the retail trade business, okay? Ali said, Don, help me pay for a year of TheoTrade subscription with QQQ. So the QQQ I was hitting a lot. Listen, the trades that I'm showing you here this evening, this is not huge hands-on kind of stuff, okay? This is going to be used as a hedge. Infinity spreads are very hands-off. They're very much set and forget order types. Fraction of your time will be enough to see results. Like, I just don't want you to think that you have to be glued to your screen. It's the only point that I wanted to make over here is don't feel that you have to be glued to the screen. We text out trades. We shoot people out trades so that they know when we're getting in and when we're getting out. The characteristics of infinity spreads, so they increase in value and exposed to heavy volatility, right? Which is exactly what you saw. Every major recent volatility event I've been part of, every single one of them, okay? So they increase in value when exposed to heavy volatility, increase in value when markets sell off or rally huge, significant profit potential with downside moves or upside moves, lose minimal capital if we drift. Everybody's worried about drift, but I just showed you, okay? Markets that were drifting in, like, Roku, I was wrong, and silver, I was wrong, okay? There was a trade in there in the XLF, I was wrong, okay? It happens. And you don't get your head taken off. There's a trade in the QQQ, I was wrong, and you don't get your head taken off. You need only be placed a few times a year. You don't have to sit here and continually place these, okay? I mean, look down below over here. That's a January trade in the VIX. This one's a December trade. These don't have to be continually placed. It's a perfect tool. It's the perfect spread to reduce risk of a stock portfolio, whether you're long or short. It's also an excellent tool for those of you looking for big returns off of market events. I mean, and again, it's a crisis-seeking trade. We've seen nothing but, literally, we've seen nothing but crisis time and again. Building the infinity spread. Now, do not let options intimidate you. The spread that we're doing below, which is actually broken into two portions, is being done for a 5-cent credit. That's confusing to some of you. But this spread, okay, this spread is akin to a massive chainsaw. And just something that I always kind of comment on this one is, options are going to be the quickest, the fastest, the safest, the easiest way to get where you want to go in the stock market, okay? But you have to know how to use those options correctly. It's the same thing as a massive chainsaw. Massive chainsaw, it's going to help you cut down a tree. You don't know how to use it right, you're probably going to take off an arm, okay? Used correctly, options are going to be effective in creating returns. Used incorrectly, you're going to lop off a couple of fingers. Listen, okay? This is what you need to know to successfully create infinite possible returns with minimal risk. That's what we call the infinity spread. First, you got to know, when and where do I place my infinity spread trades, right? When I say when and where, like literally, like what products do you put these on? When do you put them on? I did a VIX one, I did an IWM one. Look, they're right here. I built this specifically today. I know everybody's like ready to run out and put them on. Don't do that, okay? Learn how to do this properly. Learn how to actually position yourself. Learn why I'm selling a put spread to finance a call spread. Learn why I'm actually using a back spread, okay? Listen, you got to know, when and where do I place these trades? How often should I place these infinity positions? If they have to be continually monitored, they clearly don't have to be continually monitored because they're about volatility events. And volatility events, they might sneak up upon you, but once they're underway, everybody, okay, listen, everybody sees volatility, okay, once it's underway. So I stress that to you. Okay, I stress that to you time and again. You don't have to sit there and look at this thing all day. All right. So how do I set up the trades? And what's the correct market volatility to place the trades within? When I say this, like, how do you set up the trade? You literally have to know, okay? What time frame to put this in? Which options do I buy? What do I sell? What's the delta supposed to be? How many, of these do I do for my account, right? Here, do I need a large amount of capital in my account to do this? No, you do not. Some of the trades I did tonight, I will tell you, I had some bigger trades on. There's no question about it. When you look at stuff in the XLF, when you look at stuff in XLE, when you looked at stuff, even in the spiders, you realize any one of you, $2,000 account, you can do this. You can do these things with a $2,000 account, a $2 million account, but I am going to say, you don't go out there and allocate your whole account, right? What underlyings, stocks or indices, make the best candidates, okay? You didn't see me recently trading Tesla. You didn't see me recently trading all the stuff. People are like, how come you didn't do NVIDIA? It's a terrible candidate. It's not going to work because it's volatile. Everybody knows it's volatile. Everybody knows. Why did I do IWM? Because nobody was looking towards IWM, right? All of a sudden, the QQQ just caught fire. You saw stuff in Microsoft. Microsoft's like watching paint dry. Like, listen, it doesn't who cares? It's like watching paint dry. What? You need to be in some volatility with your hair on fire? Who cares? Whatever's actually going to make the big returns is what you go after. Most people, again, they don't think about the Russell as being this great vehicle. No, it's not a great vehicle. It's a spectacular vehicle. Okay. How do I know when to get in and when to get out? Okay. Percentage wise, right? What are the returns? What are the percentage returns supposed to be? You have to know precisely what to pay for this trade. If you overpay for a trade, you're dead. You got to know exactly when to be able to get out. There is a point where you have to pull the ripcord, okay? Or you're going to be the bug hitting the windshield. That's not a good thing for you. Can I do this in an IRA or retirement account? Of course you can. Everything I showed you, okay, was my retirement account. I have to clarify that. Mine and my wife's retirement account. Of course you can do this inside of a retirement account, right? How do I size my trades for my account? Whether it's $2,000 account, $2 million account, we'll actually show you precisely how to size it. What's the right amount of risk? How about you can actually detail, literally fine tune the exact dollar amount of your risk? And then moreover, how do I even build the infinity spread? It looked a little taxing there to build the infinity spread. It's not, okay? But we can show you precisely. Let me show you what we do here at TheoTrade. TheoTrade creates recipes in trading. And what you're going to find out is that trading, it's always about answering the what ifs. What might be a good, infinity spread candidate? What's the correct options expiration cycle to do the trade? How much capital do I commit to these positions? When should I execute the trade? What strike options do I buy? Okay. This is what we do here. TheoTrade has those answers. We build recipes with definitive criteria. They are checklists for each strategy and each unique variable you're going to encounter. And when we say checklists, okay, the design of these checklists, okay, what I had in mind was when you get into an airplane, and I know not everybody's flying around right now, but when you get into an airplane, a pilot goes through, okay, a fairly considerable checklist, okay? And going through that checklist, they're just eliminating certain variables. Hey, is this going to work? Check. Does this work? Check. Does this work? Check. But that's just getting yourself into the trade. Then you've got to get yourself what? In flight, in the trade. When you're in the trade, what if the stock goes up? What if the stock goes down? What if the stock stays flat? What if a dividend is coming? What if? Okay, every variable, okay, we built criteria. We built checklists that go through those variables. We built checklists that say, if this, then this. Okay, if we go here, this is what you do. This is how you react to this particular situation. Okay, this is not just about like, oh, here's a recipe to get into a trade, because that's not going to do any good. It's a recipe how to get in the trade, how to structure the trade. It's a recipe to how to actually deal with all of and answer those questions of what if it go up? What if it go down? What if a dividend is coming? What about expiration? How much can I lose in this trade? How do I get out of the position? What should my percentage returns? Okay, TheoTrade is the answer to your questions. We'll give you the right probability for the trade. How many option contracts for my account size? When do I close my infinity spread? What if we sell off big? What's the correct return for the strategy? What if we rally massively? Can I fix a losing trade? It's about how, it's about when, it's about why, it's about at what price. That's just the beginning of the many variables you're going to face while trading infinity spreads. Listen, you can read what a spread is. You can go and read about backspreads. You can Google right now. You can Google right now and probably find no less than 10,000 pages on what a ratio backspread is. Not one of them is going to give you criteria. Not one of them is going to give you a recipe for success for these infinity spreads. We have 20 plus years of trading experience. To be quite frank, that's just me. That doesn't include the 7 other full-time instructors here at TheoTrade. 20 plus years of trading experience is just me. I had access to client order flow for 15 years. Literally, I've viewed and studied millions of trading accounts and ran education for both Thinkorswim, TD Ameritrade for 15 years. And at that time, in that 15-year period, we had the largest options order flow in the entire industry. Listen, criteria is your recipe for success. The following strategy and the corresponding criteria of the infinity spread requires the utmost attention to detail. And we spent years fine-tuning this trade setup and all of the criteria. When you approach the section on criteria, you follow the steps to build a trade. We have a full-blown 2-part class called Maximum Returns with Infinity Spreads package. And the reason we broke this into 2 different classes is, first of all, okay, there's a little degree of intensity to the class. The first one is a volatility crash course. It's a 2.5-hour course, okay? It's available immediately. Then we get to the volatility backspread course. The volatility crash course is how you're going to deal with the VIX trades. The volatility backspread course is how you're going to actually deal with those IWM type trades, the QQQ trades, right? This had to be broken into 2 classes, and you're going to put these pieces together. And the slide decks that include all of the entry and exit criteria, they're the checklist, right? It's available immediately for download. The courses are archived 24/7. You can download the course on mobile for iOS or Android. By the way, you can access, you don't have to have iOS or Android. If you don't like doing that, that's fine, okay? So if you just take a detailed look at this for a second, you can download it. You can access from a website. It's 24/7. You can even speed it up and listen to these things at 2 times, but all, okay, of the material, the slide decks, okay, are available immediately for you. I'm going to go through, okay? I'm going to go through some of the curriculum in here, and I want you to know right up front, it's $497. We have an unbelievable package for you tonight. So stick with me for the next couple of minutes, because as soon as I throw a price up, everybody goes, yeah, here it is. I've taken classes for $500 before, okay? I'm going to tell you right now, right up front, we here at TheoTrade, we're not about a class for another $500. Like, we get it. People go out, they charge you $500 for a class, right? Then they charge you another $500 for an indicator, and then they charge you $500 for a class to learn how to use that indicator from the original class. Before you know it, there's another class for $500. We get it here at TheoTrade. When I say we get it, listen, I built the education division of Thinkorswim TD Ameritrade. And at that time, okay, I've watched so many education firms come and go, hundreds of them. Literally, everybody wanted to do business with TD Ameritrade. Everybody wanted to do business with Thinkorswim. Most people traded there, right? I've seen everything. And the one thing we sought to build, okay, that nobody else had is exactly what we've done here at TheoTrade, and that's this, okay? TheoTrade is way beyond just selling you a course. We don't sell an individual course. We don't think that's right. Because for $500, what are you going to learn in what? In 5-6 hours, okay? You're going to learn frustration. We don't do that. We don't just sell you a $500 class and give you a nice pat on the tushy and go ahead, knock yourself out. I'm telling you, stick with me for a couple of moments, because everything that you're going to need to trade, to invest, everything, okay, is included here at TheoTrade. When I say everything, it's not just about infinity spreads. We do everything here and provide everything for you and support you every single step of the way. One thing I'll just let leak out right now. Again, we're going to give you a discount tonight, okay? We're going to be very, very aggressive. How about this? How about if you can email us anytime you want? And I say us, me, you can email us anytime you want, okay? And you'll actually get specific trade-related feedback. We don't hedge around like, this was my uncle's trade that, this person did. Ask us trade-related questions in email. Let me see, is that worth $500? Okay. because that's exactly what we're going to discuss here momentarily. Bear with me here for a moment. This is the curriculum for the Infinity Spreads workshop, right? This is what, first and foremost, you want to learn: how to construct an infinity spread for maximum returns with minimal risk, how to build your own infinity spread, literally step by step, okay, in an index, in an ETF, in a stock, okay? How to build infinity spreads, whether you're bullish, whether you're bearish, whether you're neutral, how to hedge your portfolio. Somebody in here is going to have a 401k. That 401k could have $250,000 in it. They'll listen to this and they won't do it. I'm telling you right now, you have $250,000 at risk. Just learn how to hedge it. Okay, that's a big portion of what we do here. We have institutional money managers, okay, tons of them that are clients here. In fact, I think I even took a quote from one in just a moment. We have institutional money managers that come here to TheoTrade to learn how to reduce risk of a portfolio. Okay, this infinity spread, this is the same tactic. There was a portion of my career, okay, where I, with a group, managed over $300 million of capital early in my career. We managed $300 million of capital at early thinkorswim days. And we use the same techniques to hedge the portfolio. We're actually going to show you when to open, when's the best time to close, tools for analyzing market conditions, okay? How to create trades based on movement and market volatility. Market volatility, not market direction. How to generate big returns at a small account or retirement account with minimal risk and minimal options experience. What strikes and what expiration period give you the best and highest probability of success, okay? Why infinity spreads are perfect for part-time traders. Trading doesn't have to necessarily mean you're glued to the screen all day. So I just wanted to throw a little bit of curriculum at you, okay? Again, what our members are saying, this one actually came from Ken. I blurred out his last name, okay? Woohoo, thank you, Don. I'm never sure of trades that are new to me that I structure myself. This is great to hear. So this is Ken bouncing an idea off me, not to brag, okay? But this is due to you and your magnificent team. I am up this year $1.67 million in profit. Listen, Ken trades a little bit bigger, okay? There's no question about it. The guy is still up over 1.67 million. Yes, I'm going to pull a big hunk of this out of my wife's account. Plus, I'm going to give my granddaughter 50,000 to work on her master's degree, thanks to all of you. Okay, I'll let you know how this trade goes. Need to check out the chart on the Japanese ETF. Thank you, the blank family. Right. By the way, we also do a weekly update here. When I say a weekly update, the infinity spread each and every week will actually produce a video specifically to update you on this. So we also send out text messages, but I wanted to give you a little bit of a glimpse, and we will do this. We'll give you a little bit of glimpse of what TheoTrade really looks like. We do a weekly video specifically on this strategy. You'll always be in the know. Like there's no guesswork. Like this is the trade that Don has on. This is the trade that Don took off, but we're also texting out the trades in real time. All right. So you want a bonus, and I talked about this a little bit earlier. TheoTrade goes beyond one class or one indicator. Like we understand that people want everything. They don't want to be nickel and dimed. They want everything to trade, everything to invest at one place and one price. So here's how we do bonuses. Bonus number one, we give you access to every course that we've ever done here at TheoTrade from day one. Tonight, you're going to get access to over 97 trading classes. Every one of these classes has its own unique and specific criteria. Right here, maximum returns with infinity spread. This is the package. It's $497 class. It's included. Guide to surviving extreme volatility. It's included. Volatility backspreads. Guide to small account growth. Right here, that's the in-out spreads course. That's the most prolific class we have ever done. It's included. Okay, I'm just giving you a smattering. How to collect income being short. This is the risk to a spread class, right? The next big short. Iron condors for income, selling premium and minimizing risk. Day trading. Okay, day trading, specifically NASDAQ futures, covered calls for income generation. Essential skills for consistency in trading. This is actually a mindset class. Top 10 skills for growing a small account. Pairs trading. People, that's just a smattering. There are 97 full-blown courses here at TheoTrade. It's over $9,000 in classes alone. And you can go out and you can buy classes from all these different places. That's great. But I'm going to tell you right now, nothing at any cost, okay, is going to even come close to the archive that we've built here at TheoTrade. And by the way, I'm bringing you, this is TheoTrade. This is what the classes look like. Option class, option newbies. Somebody inevitably here goes, I don't know anything about the markets. We have a start here menu. You know what start here does? Options 101, options 201. It's to get you ramped up. Okay. It's in here. If you name a class, I'm telling you right now, it's already in here. Here, somebody name a class. Okay. You want to learn about what? Hedging strategies? You want to learn about stock? You want to learn about mindset? You have problems between the ears. Everybody gets that. You want to learn about day trading? Like we understand. Here, click on day trading. Okay. What products to watch and why? Day trading NASDAQ futures. Beginner's Guide to Intraday Futures. It just goes on and on. There's that many courses here at TheoTrade. You want to learn about options? I'm the options geek here. Okay. Butterflies Guide to Weekly Returns. All right. Beginner's Guide to Ratio Butterflies. In-out spreads. Here, selling options for a living. It's all there. I'll cover more of that. 97 classes. By the way, TheoTrade is not, a one-trick pony. It's not just myself, Don Kaufman. Here are our instructors here at TheoTrade. All right, first in the list, Jeff Bierman. Jeff Bierman, okay, analyst, trader, and former chief market technician for TD Ameritrade. Jeff actually built a huge number of the studies on Thinkorswim. Jeff was also a former hedge fund manager, along with Blake Young. Blake Young actually managed money for quite some time. Jeff is also a professor of finance at Loyola in Chicago. So Jeff actually moonlights with us here. I've known Jeff now for a better part of, wow, I think we're going on about 12 years now. So we pulled Jeff from TD Ameritrade. Second I left, he left. Matt Williamson, market neutral and premium selling option strategist. So Matt, okay, is our premium selling guy. What does Matt do? He's market neutral. He sells option premium. Matt is also kind of our in-house spreadsheet geek. If you're type of an engineer, okay, if you love some of the mathematics of options and so forth, Matt Williamson is going to be your guy. Email him till your heart's content. That's what we're here for. Next in the list, Corey Rosenblum. He's our senior strategist and resident swing trader. Though I don't want to take anything away from Corey, he's also a CMT, as is Jeff Bierman, a CMT, and Brandon Chapman's a CMT. CMT is an extraordinarily difficult designation, okay, to obtain. We have 3 of them on staff. Okay, so Corey is our swing trader. And again, which means that, shorter term positions, if you're holding positions for a couple of days, couple of weeks, Corey Rosenblum is going to be your person to turn to. Brandon Chapman, macroeconomics, technicals, and fundamentals. By the way, Brandon was a phenomenal grab for us here at TheoTrade. Brandon also worked at TD Ameritrade, and he wrote the education course manuals for TD Ameritrade. You guys are going to love this. Brandon wrote a manual, okay, that was an 18-month course taught through TD Ameritrade. It cost $24,000 for 18 months. Brandon wrote the manual. He now works here at TheoTrade, does a tremendous amount of stuff for us here. And he'll be the first to tell you what we do here at TheoTrade smokes what we did back at TD Ameritrade. Yeah, we don't cost $24,000. Next in the list, Steve Slim Miller. I've known Slim Miller since I'm a kid. He's a 43-year veteran stock options and futures trader. He's also our resident psychologist. If you need, okay, market psychology, we have classes on it. We have access to Slim Miller. Next in the docket, Tony Rago, NASDAQ futures intraday strategist. All Tony does all day, calls out setups in NASDAQ futures. The only product that Tony Rago trades is NASDAQ futures. How often does he do it? All day long. He's just in there all day calling out setups. And our newest addition to TheoTrade, Blake Young, market profile, futures, currency, and commodity trader. Again, we're also really stoked actually to have Blake on here. So Blake also comes from a background of both Thinkorswim and TD Ameritrade. So yeah, we salvaged a couple people from Thinkorswim TD days. But this was the talent, this was the crew, and we brought him back over here, of course, to TheoTrade. Again, what our members are saying. You know what? I brought up a recent one over here. Don, your organization, and this one's from September 23rd, your organization continues to blow me away with insights, expertise, resources, personalities, and structure. I've learned so much, okay, and been able to apply the knowledge to improve my trading exponentially. Thank you. And thanks to all your staff for everything. I'm grateful. I found TheoTrade, and grateful I found sense, okay, to choose your organization as my mentor over all the other players in the marketplace, okay? And now you've actually added Blake Young, whose style I enjoy immensely, okay? And I'm starting to adopt. Don't know what else to say except that TheoTrade is awesome, very satisfied customer. It's Steve from Southern California. I just wanted to throw that one in there because it's rather recent. okay? That's the first bonus, 97 classes. The second bonus that we provide to you here at TheoTrade, we give you a 3-month all access pass to TheoTrade. It's unlimited access to what we term TheoStream. What is it? It's a live trading chat room. We trade throughout the course of the day and you get to trade with us. Okay, we're live at least 6 hours a day, usually 6.5 hours a day, the whole entire market trading day. We provide real-time trade ideas, real-time market insights. Okay, we do text and push notification of trade ideas, including, of course, infinity spreads. We have 5 distinct trading portfolios. We have daily coaching sessions. Coaching sessions are continued education. Who handles this? Professor Jeff Bierman. Okay. By the way, you can join Jeff Bierman over at Loyola in Chicago. I think he's $42,000 a year to visit Jeff at Loyola, or you get him right here at TheoTrade. And all of our instructors directly answer your trade questions via email. You can email us. It's another $1,000 plus of support, trades, and insight. So what are we offering here? It's a live trading chat room. In fact, if you want to see this, and again, I'm going to spend a second or two on it. You want to see what the live trading chat room looks like? It's live, I believe. It might be live right now. Okay. So, it's off air. It's going to go live in 15 minutes. So at 5 p.m. Pacific time, 5 p.m. Pacific time, Jeff Bierman's going live. We do a happy hour every Wednesday night. So tonight's happy hour. Okay. So happy hours Wednesday night. Anyway, it's 5 p.m. Pacific time that happy hour actually kicks off, and Jeff Bierman will go live. Yeah, we'll actually leave that there because he'll pop in here in a couple of moments. We do it all. Okay. In addition to this, not done yet. 59 proprietary indicators and scans. Okay. Remember, tonight, I promised each and every one of you, we will give you the auto expected move indicator. Stick with me right to the end of the webcast. Okay. We got no more than 15 minutes left over here. All of the other indicators that we use on a day-to-day basis, we give you. Quantix, RSI Laguerre, okay. You name it. We provide each and every one of these to you. The SPX expected move, it's another $1,800 plus indicators and scans. I mean, for the most part, again, to kind of recap this, we include everything. Classes, coaching sessions, email access to the instructors, a live trading chat room, live trades, indicators and scans, okay, mobile access 24/7. It's everything you're going to need to succeed in this business. We built TheoTrade is the Netflix for traders. Name a genre of trade, and we've got it. The next 3 months, it's $297. Okay, that is for tonight. And I want to clarify something. It's $297 for 3 months. This is not an introductory offer. This is not a membership. It's $297 for 3 months. After 3 months, if you want to do it again, it's another $297. After that 3 months, you want to do it again, it's $297. Okay. We do not do memberships anymore. We realize that people don't like memberships. That's fine. Let's go right now to enroll for it. It's TheoTrade.com/profit. And I'll detail once again, it's $297 for 3 months. It includes the maximum returns with infinity spreads class, right? 97 trading classes, all available immediately and on demand. There are new monthly classes, and we have a bunch of new classes coming up in the next 3 months. Live trading chat room. Traders provide real-time trade ideas, broadcast a minimum of 6 hours a day. We do what? 59 proprietary indicators and scans. We do text and push notification with 5 distinct portfolios. Daily coaching sessions, continued education in stocks, options, and futures. And the instructors here directly answer your questions via email. The one thing I'll tell you right now, email us, okay? Email us one time. You think that's not going to save you more than $297? Okay? People agonize over trades and so forth that they do. Bounce ideas off of us. That's fair game. Again, it's TheoTrade.com/profit. And I'm actually going to pop this up here for again. It's TheoTrade.com/profit. Before I go any further, tonight we'll make it a completely riskless trade, right? Listen, it's everything that you need to start trading from absolute novice to expert. And we have absolute novice courses and we have expert level courses. And I'll show you that here as well. There's a money back guarantee. Trade with us. Just trade with us over the next 3 months. If you're not satisfied, email support@theotrade.com. Just give us the details of your trades and receive a full refund. And again, I try to clarify this best I possibly can. The way we have some stipulations on here, okay? The stipulations are really simple. You have to trade, okay? But we don't clarify what satisfied means. Listen, if you're not happy after 3 months, just email us. You don't have to call us, do a little dance, make a little love, get down tonight. You don't have to do any of that. It's 297 bucks, okay? We want people that want to be here. Somebody just asked, like, how many people we have? We have just over 6,000 people right now on TheoTrade. How do we do this for $297? Because we have 6,000 people on TheoTrade, because nothing else in the entire industry even comes close. And we do this riskless because we do a riskless trade for you. We want you to be comfortable, okay? The stipulations, do 10 trades in the next 3 months with us. You have to trade live. It's not fair if you don't, okay? Okay, you got to trade live. You got to have at least $2,000 in your account. You have to follow our criteria. You can't just make anything up. And by the way, forget infinity spreads. You can do any, okay, of the TheoTrade strategies. Look, any of the TheoTrade strategies in the next 3 months. Okay, if you're not happy, just shoot over your statements. Okay, and this ain't paper trading, people, but they have to be real account statements. And we'll just give you your $297 back. And the only reason we do the stipulation like that is because, well, initially we didn't have that, and people would just go through 3 months and they go, oh, that was the best thing ever. Give me my $297 back. We're like, that's not fair. Trade with us. That's all we're asking. Trade with us. Listen, get into TheoTrade now. We're going to work with you directly. If nobody else provides, okay, no one else provides one-to-one unlimited email mentoring. Nobody provides everything encompassed, okay, under one roof at this level of talent. We're going to give you 30. Again, we're limited tonight. We're going to give you 30 spots. And we say we're limited, I'll tell you exactly why. We have to go through and reconcile all of the trades on this riskless trade deal. Look, 10 trades, okay, 30 people. We'll give 30 spots tonight on the riskless trade deal. Again, there's unlimited email mentoring, which might torment us, but it's par for the course. We're used to it. Send us your trades. $297 riskless offers, never been available before with infinity spreads. All right. By the way, I'm actually going to take you over to the site right now because I think it's important, because I have a couple of questions that are popping in here specifically on this. So let's actually jump to it. What you're actually looking at right now is this particular website. It's theotrade.com/profit. Again, theotrade.com/profit. As I said, there are 30 riskless trade spots left. Okay. It provides 3 months of access. Okay. Any of our on-demand recording, any of our live, okay? All you have to do right now, you click add to cart, okay? When you click add to cart, and I'm just gonna show you something for a brief moment, okay? Scroll down, okay? Put your phone number in here, obviously all the information. Put your phone number in here. That will immediately, okay, get you into the text alerts, which we texted out a couple of trades this week already, but we probably still have some stuff coming out later this week. But make sure to include your phone number in there if you want to receive text alerts. If not, you could just download the TheoTrade mobile application and get push notifications later. Okay. The other aspect I wanted to show you in here, it's a single payment of $297. Okay. And that's something that just comes up just incessantly. Like, people go, are you sure this is not a membership? It's a single payment of $297. In fact, you can even make 2 payments for 149 bucks, right? It details, okay, the money back in here. So by all means, terms and conditions, all of it's in here. Just again, I wanted to take you through there. Make sure your phone number's in there, all right, for the text messages. And it's a one-time payment of $297. And again, the web address right now for the first 30 people, it's theotrade.com/profit. All right, I'm going to go onward and upward, and I'm also going to answer a couple of questions here this evening, and let's go to it. Oh, this one comes from Curtis. What our members are saying. September 4th, please allow me to impress upon you how incredibly valuable your first hour in the chat room was today. Your true concern for the welfare of your clients, listeners, is unmatched in the industry. You gave an incredibly practical advice for those feeling the pain. This is on a day we were selling off huge. Look back at the chart, almost as if you were their personal trading coach. It was amazing. Okay, I only wish all of my I don't want to sell, Okay, in case it keeps going higher, friends, we're listening. Okay, keep up the great work and thank you. Comes from Curtis. Curtis is also a former institutional portfolio manager. Again, we have a lot of professionals that have now come to TheoTrade. All right, onward and upward from here. This is, again, everything you get today. It's $297. It's 3-month access, live trading chat room. Everything's archived 24/7. By the way, you can get anything and everything archived. It's all in there and it's all searchable. In fact, go to theotrade.com/profit. And while you do, I'm going to bring back up the TheoTrade site again. TheoTrade is going live in 6 minutes. For those of you, you're enrolling right now. Okay, if you are enrolling as we speak over here, you can actually tune in this evening to Jeff Bierman. I mean, he's coming on. And again, it's going to be recorded, but this is intense stuff. Actually, Jeff's going to be talking about here today, gone tomorrow. Stocks once of distinction, now in extinction. So this is a great chat. And again, this is it's pretty interesting to see this as I kind of scroll through over here. These people are all live right now, people. They're getting ready for this evening chat that is going to be kicking off. Again, Jeff Bierman is actually heading it, and we're going into that here in a moment. Again, you have a start here menu. If you're an absolute novice and you need help, options 101, 201, 301. If you feel you're experienced, hey, cut to the chase. If you're experienced, you should jump right over here to order execution part 1, 2, and 3. Just these order execution classes will save you thousands of dollars. Okay. I worked in the brokerage industry for 15 years. I know every nuance from the time you actually click your mouse to the time that order fill is back. And we show you, okay, how to circumnavigate markets. Okay. And when I talk about circumnavigating markets, how to get the best fill in between the bid offer spread. It's huge. I'm telling you, it'll save you guys thousands and thousands of dollars over here. Now, again, theotrade.com, by the way, /profit. All right, onward and upward over here. So it's archived. Again, everything is searchable. You name a genre, a topic, it's in there, and you're going to have access to 97 classes as of this evening. Again, what our members are saying, you know what, I wanted to bring this one up here briefly, and then I'm going to answer a couple of direct questions, but this one comes from Brian, and it was March 16th. And the reason that I'm bringing up this email, on March 16th, that was the middle, okay, of the most hideous portion of the Corona crash. Wow. I want to say thank you, okay, for what you taught me in the last 2.5 years. I bought into what you taught about risk twist spreads, which, by the way, that is the infinity spread, and duration positions. I started to trade options almost a year ago. I missed out on the last market move up, but the moment my IRA is up 14.8% for the year. Granted, 14.8% for the year on March 16th, when the marketplace was what? Down almost 30%. What I've invested in TheoTrade has been so worth the money. Thank you, from Brian. And I just wanted to detail that before I answer a few questions. Again, if you go to theotrade.com/profit, follow me to this link now. Follow that link right over here. Scroll to the bottom, okay, for the auto expected move indicator. Those of you, as you are enrolling tonight, you need not grab this link. This link will be available for you on the TheoTrade site, okay? Again, if you're enrolling right now, simply click add to cart. Again, I will update everybody because there was somebody that already asked, am I in the riskless spot? I will update everybody, okay, on who got some of the riskless spots and who did not. So by all means, okay, that's par for it. And by the way, as the questions are coming in, I will also answer those. Let me get to some general questions answered, okay, and kind of get things wrapped up here in the next couple of moments. But listen, general questions. You need a laptop. You don't even need a laptop anymore. I think you could probably do this with an iPad and an internet connection. We have everything you're going to need to get started from novice to expert, okay? The second one that always comes up here, and I've constantly mention this, people, this is not a membership. We don't auto renew, okay? That's just not the way that we work. We don't like that idea, okay? We don't like when people do that to us. So we give you the opportunity after 3 months. You determine if you want to do this again, okay? Number 3, okay? We're now providing Infinity Spreads a weekly video update so you can follow all the moves that we make, right? So we do a weekly video. I do it every single Friday, and it'll actually give you every little nuance of this trade. You know, whether I'm doing it, whether I'm actually getting in, whether I'm getting out, all of it. Okay. Um, TheoTrade archives absolutely everything, and it's all searchable. So you can go through and you can actually come in there. We built a search engine right into TheoTrade. Number 5, we're going to provide you access to TheoTrade mobile. You can download it. All of the archives are available to view at your leisure. What's also kind of neat about TheoTrade mobile, you can watch stuff at twice the speed or 1.5 times the speed. So if I'm on for an hour, you can actually condense me to like a half hour, right? Number 6, add your cell phone number when enrolling to receive, okay, text alerts, trade text alerts. Download TheoTrade mobile for push notifications. Number 7, you can email us, okay? Email us anytime and receive a response within 24 hours, okay? Including trade related questions. So I always stress that one because it's always the big kind of sticking point. People are like, can I really listen? You come right at me and say, should I do this? It's okay. It's fair game. Should I do this? And I'm going to tell you right now, okay, I'm not going to tell you, should I buy Apple right here? I don't know if Apple's going to be like spectacular, but I'll tell you if you're doing the trade right. Okay, we'll get you in these trades, we'll get you out of these trades, and we'll do it right. Listen, number 8, you're going to gain access to every course that we've done in the previous 4 years. Classes, coaching, live trading, everything is searchable. Name any trading topic. Seriously, name a trading topic. We have an archive on it. There's nothing in this entire industry that even comes close to our archives over here. Number 9, all the trades can be done inside an IRA or retirement account with as little as $2,000 inside the account. Number 10, we at TheoTrade can help you get approved for options. If you have problems with your brokerage firms, if you have brokerage firm related questions, most of us came from that side of the business. We have unbelievable relationships at the brokerage firms. E-Trade, which is now part of Morgan Stanley. We have relationships with Schwab and TD Ameritrade and Tastyworks. You name a major brokerage firm, we have relationships there. There are 30 riskless trade spots available. Listen, enroll now. There's no risk in enrolling now. It's theotrade.com/profit. Again, I wanted to reiterate also, we have a live chat coming on right here, right now. When I say right here, right now, I'm actually going to go to the member chat room and actually show you. This is TheoTrade.
For some of you, okay? This will be a trip down memory lane.
He's
really,
actually live
really
right now. And you can listen to him because I know it's coming through your audio.
Some of you are older than me, some of you are younger than me. Makes no difference. This is one of those like reminiscing evenings.
So that's actually what TheoTrade looks like. You maximize into this screen. You can actually watch the video live. Okay. You can actually enroll right now and hop right back into this because here's our clients in there right now. Good audio, clear. He's just getting started in this evening's chat. Okay. So by all means, hop into TheoTrade. Check it out. We broadcast in here for 6.5 hours a day, literally 6.5 hours a day. This is from Todd Summerall. This was an email that he gave me. He goes, don't know if you remember me, but I emailed you a few weeks ago and you told me my delta was positive a couple thou or more. You told me to smash it or I'd be in trouble. I smashed it. You saved my account. I just want to thank you. Listen, people, email us. Okay. I told this guy to smash his delta. If he didn't smash his delta, he's going to get wiped out. Literally, his finances would have been completely wiped out had we not told him. Okay. And by the way, he said I could use it. So I threw his name in there, right? This one's from Christopher. It goes on and on. I'm telling you. Okay, this is where you want to be. If you want to learn this business, this is where you want to be. Hop over right now to theotrade.com. Okay, again, theotrade.com/profit. And I'm actually going to hop in right now and I'm going to answer some really specific questions. I'm also, I will read off a couple of the names that have just enrolled for our riskless trade. So, one of the first ones that came up, it came up early on here. Was from Ricardo, and it said, what is the definition of edge? Okay. For me, in this particular context, the definition of edge, okay, was the differential of what the options market depicted risk to be and what actual risk was. The definition for me for edge was options said we were going to move $5, but instead we moved $10. Okay. That is displaying the edge. That's not trading the edge. Trading the edge is what strategy you're going to go in to actually harness, okay, the marketplace that moved more than it was expected. So Ricardo, I hope that that actually helps out. By the way, Edward actually asked the number of trades we're going to get from you. We trade, Edward, constantly in the chat room constantly. Now, we text out trades. We try to text out approximately 3, maybe 4 trades in a week. However, we have tendency to cluster. There might be a whole week that goes by, not a trade comes out, and all of a sudden, bam, 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 bam. Listen, this is my money at risk. Okay. When I trade, you're following my trades. So I want to make sure that you guys understand. I'm not going to just go out there and be like blindly, every Monday at 3 o'clock, I put on a trade. That crap doesn't work. Okay. I'm going to put on trades at my discretion, trades that are going to work. And in doing so, we kind of cluster. Where the last couple of days, we've traded a lot. Right before the election, we pulled back a little bit because we already had positions on, and then we clustered a lot because we had to take some profitable trades off. Now we're actually rebuilding, okay, and starting to fire off more. So hopefully that helps. Again, there are trades though, and I want to make this clear. Every single day on TheoTrade, you can trade with us all day. Okay, we fire off intraday trades and setups all day, especially in futures contracts. I'm the options geek. Tony Rago, okay, and Corey Rosenblum are your futures geeks. And then we've got a couple of other traders mixed in over there, but we trade every single day on TheoTrade. All right. Oh, Luke said, what about daily options the SPY offers, okay, and short-term moves? Luke, you'll see that we trade the SPY constantly. There's just no question even about that one. So we trade spiders constantly. So by all means, trade with us because we talk, again, specifically intraday. I talk incessantly about expected move on an intraday basis. Okay. By the way, Mike was saying, how long does Don stay with these positions so that we can stay away from the valley of death? Mike, that's exactly what the class teaches. Okay. Mike, you're asking all the right questions. So the valley of death is what you have to avoid inside of the backspread. And we teach you precisely how to mitigate the risks around that. Next one comes from Bernard. On average, how many infinity trades do you put on monthly? You don't have to put on that many, Bernard. You can put on as many as you want on a monthly basis, but quite frankly, you could put on 4 to 5 infinity trades all year. This has been a unique year. I put it on, ripped it off, put it on, ripped it off. I typically left these spreads on for long periods of time and had big, broad periods of nothingness followed by bliss. Lately, it's just been knocking them out of the park one after the other. I'm telling you, 2020, you saw them all in my trading results. I don't mind, go back through from 2015 to current, okay? When it comes to infinity spreads and so forth, no one's seen anything like what we've got in 2020. And I kept thinking it's going to dry up. It's going to dry up. It hasn't dried up. In fact, it's actually gotten better. And when I moved away from the IWM, I moved to the QQQ and we hit big in the QQQ. Now I'm like, oh, I got to shift back to the IWM. The opportunities, okay, are all over right now. Somebody asked, what's the S&P 500 gravity points indicator? Those are specific levels, okay, that I've worked on for years. And that's one that takes a little bit more knowledge. And we'll talk about gravity points when we actually trade on an intraday basis. Gravity points, okay, are essential levels inside of the S&P futures that are derived by trading firms. All right. A few names that are popping in here. By the way, I'll tell you right now, it takes me about 5 to 6 minutes before I see your name populate into here. I know there's still some questions coming up over here. Bernard P from Arizona. Okay. I'm going to butcher this next name. So Bernard P from Arizona, you are in for the riskless trades. I'm going to say Tingmei J from Maryland. I hope I did not butcher your name. Mark K from North Dakota, Julie Y from Hong Kong, Wes P from Florida, Randy R from Texas, Robert L from Florida, Christine S from California. Those are the first batch of names that have just come through over here. And again, there's still a bunch of people, obviously, that are coming in here. Another question popped in. Do you cover extended day trades? So we cover a little bit about earnings, but I'm going to tell you right now, and I'll just cut to the chase. Never trade stock in the extended hours, at least in this environment, okay? The liquidity is not deep enough. And anybody that talks about like trading stock in the extended environment, okay, hasn't worked in the brokerage industry for 15 years. Because I'll tell you right now, in the extended hours, you'll get completely taken apart. You don't even stand a chance. okay, in extended hours. The rules also change in the extended hours trading. It's not beneficial. But I will tell you where we do trade in extended hours, okay? We trade in extended hours in futures contracts because there it's safer, the liquidity is there. So you don't have to trade futures, but I will tell you, I would not trade stock in extended hours unless it's absolutely unequivocally a necessity. So please, please, please be careful in doing so. And by the way, if you guys haven't picked up on this yet, I don't mind hitting questions head on, and we'll do that continuously, even if you don't like the answer. It's more important, okay, that you guys learn either the right way, the way to save capital, the way not to get your head taken off. It is essential that you understand that I'm coming at you as straightforward as I possibly can. The most important thing here at TheoTrade, listen, it's 297 bucks. Who cares? We have 6,000 members. We're going to be fine. Okay. I mean, the most important thing is your education from this point forward, and that you get your questions answered from this point forward. A couple other names are popping in here. Charles J. from Wisconsin, Genovi R. from Louisiana, Saunders P. from Florida, Richard L. from Massachusetts, Conward J. from Georgia, Gregory B. from Arizona, Unhard B. from New Jersey. All right. I think I've gotten most of the questions. I'm going to sit in here and kind of type in questions or answers to some of the questions if I missed them. I want to thank everybody for joining us again. Go to theotrade.com/profit, enroll now. Again, thanks everybody for joining me tonight. And please, you can hop right in right now, okay, and see Jeff Bierman live or catch him in the archive. I'll be live right at the market open tomorrow. Thanks everybody. Have a wonderful evening. Bye-bye. Again, they're kind of getting acquainted with